What's going on, everybody? It's your boy C-Zar, and it's come to my attention that a lot of you are actually curious as to what the settings are on my Fibonacci retracement tool. So I'm going to go over how to set up the Fibonacci retracement tool so that you can have the settings match exactly the same that I have. We're also going to go over how to use it a little bit, some dynamics with the Fibs, kind of a how-to video on the Fibonacci retracement tool. If that sounds good to you, hit the like button, subscribe, and let's get into it, okay? It's been a while since I made a video like this. I actually have made videos like this before. It's probably been like over a year, maybe 2 years. We've got some different dynamics to talk about as far as the Fibs go, maybe some different rules that I've adapted, but here we are, and things always change, right? You have to be, I do want to say before we get too far into this, that you have to be willing to understand that while there are rules, while there are ideal kind of schematics with these Fib retracements, not every play will be like that, and sometimes there are seasons or cycles where the Fibs respect things differently, and it's on you as an analyst to be aware of what Fibs are and aren't respecting and kind of go with that personality, that phase of its life, if that makes any sense. If it doesn't make sense, well, just keep trying. You'll get there eventually. Anyways, Fibonacci retracement. I'm on Cookie DAO here, not because we're going to use it on Cookie, but because there's a lot of blank canvas here. So I'm drawing my Fib tool, right? First and foremost, you're here, Fibonacci retracement, you draw your Fib tool, and my tool looks like this. Most people's tool, whenever it comes out, it'll probably look, let's see, do we have, where are the defaults? Oh wait, right there, apply defaults. Your Fibs will look like this, okay? Where you've got some extensions up here, but largely what it is just this kind of plain box looking thing with some shadow, whatever, shading in it. I don't like the shading. I don't like the background personally. From a high to a low, I feel like it's distracting. And while it does encompass the move that you're looking for, and that's nice, it doesn't go out to project where these levels are for whenever the price moves back up. So what I like to do is I double click it. We double click it. We go all the way down, and we click Fibs based on log scale. Okay. That way, whenever it is in log scale, the Fibs are based on log. Whenever it's not based on log, the Fibs automatically take itself out of log. So I think, not financial advice, not a financial advisor, it's always good to have this checked. Just go down and check this. And then you want to, where is it? You want to extend to the right here. You want to click up here, extend right. Okay, so now your lines extend right. Now you've got this high to low measured, and you can correspond these measurements with any future price action that takes place after the low. Okay, so that's great. We double click it again to get rid of the borders, because I hate the borders here. We go to the background. Instead of making it super deep, we make it super shallow, completely invisible, so you can't see anything. If you want it to be somewhat visible, you can do that. There's nothing wrong with that. You know, go make it somewhat visible, whatever. And then I like also to put the lines, these level lines, I like to have them very thin. I like to have them very thin. You know, the colors stand out, but that way we can better represent exactly what price we're looking at here. You make them thicker, and it blurs the lines a little bit, if that makes sense. Again, double click. Now it comes to all these different Fibs here that you can unlock. I like the 1272. I like the 2272. The 3272 is fine, but I like the 4414. Any of the 618s. I like the 4618. I think there should be a 3618 good. We have a 3618 in there. Even a 5618 or whatever 618. You can go all the way up to a 2618 or a 9618. I don't care. Probably unnecessary at that point, but I think you really start to lose relevance once you get to like a 3618 or higher, personally. But it all depends. You know, mess around with it. Shorter time frames, smaller Fib ranges definitely can have larger Fib extensions. They definitely can. These longer ones, right, like a 3618. Cookie DAO is not going to $554. We're not going to see a multi-$1,000 Cookie DAO probably ever in our lives, right? Unless the dollar hyperinflates. But at that point, Cookie would probably crash along with the rest of the market. We double click here again, and I would just say, you know, go ahead and unclick all of these if you want. There's nothing wrong with having them. You can understand where they are. I don't personally care for the 300 level or the 400 level. I like the 200 level. I like the 200 with the 2272, and how I set it up personally is I like to set up some ranges. So we're going to set up some personal Fibs that I have now. Hold on real quick, you guys. Okay, hold on real quick. Just had my daughter was making noise, so I'm like, can you just go to your room, please? She's crazy. Looking at this here, she's like coming out trying to be distracting. Like she's doing it on purpose. I'm going to change the 3. You don't have to change the 3. You can change whatever you want. I'm just going to change the 3 to the 886 because I think the 886 is very useful. The 886 right there. I don't like to have the same colors overlap, right? Because then it gets confusing. So I'm going to make the 886 a different color. Let's make it, I don't know, let's make it like green. It can be green. It could be yellow, whatever. It could be a yellow color, whatever stands out. The colors don't really matter to me, right? The golden ratio, typically with the 618, you also, I like to identify it as a range. So I make it white because I think white stands out a lot on this black background. And the golden ratio, I think the golden ratio line should stand out. This blue doesn't really stand out that much. So I do like to go in and change that. I made my 1618 orange. My golden ratio is white, the 618 here. And then I also like to put it as a range. So the 618, I'll take this one here. I'll do 0.69 instead, and I'll make that white as well. I do 69 because 69 is actually a rather serendipitous number. It's a number of balance. It's also an innuendo, and people think that it's funny. It's kind of funny that the 69 actually between this area, look at this, right? You go right there. It well encapsulates because typically with the golden ratio, you don't stop right at it. Typically, you actually go a little bit through it. And that's what I found in my 10 years of doing technical analysis. So that's why I give it a range. And I make them both white. Again, I don't like to have colors being the same colors, but whenever they are, that's because it's a range. At least that's how I do it. That's what makes sense in my head. So I know that when I'm looking at the golden ratio, I'm like, okay, it's not just a strict line. It's this area that we typically find resistance at. It's just a good reminder, right? Anything in this area, it's fine, right? We haven't broken through the golden ratio, even though we have. We're in that range still. Does that make sense? And then I do the same thing here. I like the, the 1618 and the 1272. They're just kind of the same color, so I'm going to change it again. I'll make it like, I don't know, maybe the 1272 can be a blue color, whatever. The 1618 is a good area as well. It's got that, so I'm going to leave it at that color there. Maybe we could make that one white. All golden ratios could be white. I don't care. I've always had the 1618 being orange, so it's kind of like a habit to keep it orange, but whatever. It can be white. I like the 1414 to be a different color too because red is just, I feel like it doesn't pop as much. So make it like a kind of more of a pink color right there. That kind of pops a little bit more. The 200 level. The 200 level is typically an area that coincides with the 2886, the 1886 as well. So I'm going to take this 4.414. I'm going to turn it into the 1.886. And I'm going to make this purple as well so that it matches with the 200 level. Oops, let's see. Something like that. We click OK. So now my 1886 200 level, this is also an area right here, right? But it's purple, or it's a different color than white, because the white color really stands out. That's the golden ratio zones. These are your levels of importance, right? These colors that pop, to me, those are the more important levels. The 1886 is an important level. And I feel like I can barely see these colors here on this. I don't know about you guys, but I feel like I can barely see these colors. So maybe we'll make it a little bit lighter. Right, something like that. It is an important level, but you don't always find resistance there. And if you do, you typically don't find resistance right at the 1886. Sometimes you do, but oftentimes enough you kind of go in this range as well. That's kind of a range in itself. And then I also have the 3113 and the 3618 as well. Let's put those on there. So I like to do the 3.113 and then the 3618, or the 3786. I'm sorry, 3.786. That area, we can make that orange, the color of Bitcoin. That's why I have it colored that way, because that is typically the money zone. Typically, the 3786. Why did it not show? What happened? 3113. Oh, it's not the 3113 that I'm thinking of. It is the 3618 to the 3786. I'm getting confused. Where? Maybe it's the 3886. Let me put my fibs on here. I got my template here. Fib 2, maybe. Is that the one? It's the 2886 to the 3113. That's what I'm getting caught up on. Okay, this is the money zone. This is the money zone here. And again, it's a zone because both of these colors are orange. The 2886 and the 3113, typically you don't stop at either of these lines, but in this area. But you might stop at either of those lines too. The 2618 is red for me because typically you don't break above the 2618. But when you do, if you ever do break above it, you get to this zone, and that's kind of, again, that's why it's a zone. It's the money zone. At certain times you do exceed to higher extensions, but typically what you don't see is a movement like this, where from a high to a low, typically what you do not see is just one solid move that breaks through all the way over here, right? That just takes you all the way up through here. You don't see that, right? Typically it's in phases. So the biggest moves that I've ever seen happen are moves that just go all the way up to this money zone area. That's the biggest moves that I've seen happen. It's very rare that they just keep going nonstop out there, especially on such a broad time frame like this, the weekly time frame. Moves like this that go all the way up to this zone or higher, they're typically on shorter time frames. But if we are going to work our way up to $554, which we're probably not going to, if we are to work our way up there, you'd find resistance here, you find support there, you find resistance here, support, whatever, you kind of stair step, do your thing, and then we give you the go ahead that's there, right? Typically, you don't look for these deeper extensions until you've shown respect at these other levels. But by that time, you already have other fibs to base off of. You already have other higher lows and higher highs to base off of. So it kind of becomes irrelevant, but it just depends. Let's look at Bitcoin, for example. Let's go on a monthly time frame here. We're on the all-time history index. Let's go all the way back to the very beginning, the first bull market high to the bear market low here, okay? You found significance at your golden ratio here as resistance and support, even in the next cycle. 2272 resistance there. Look, even as we go higher, look, you're finding resistance here at the 3618. I was telling you there's no need to look at the 3618 because high to low, look at this. It took you from 2011 until 2021, 10 years later, for that to become relevant. Now, it is relevant. You're showing relevance here. Will we show relevance at this 667,000 level? $10 million. Eventually, sure, we're going to get there. We're going to show significance at both those levels. But you see how there's less going on up here. There's less significance. So it's better to draw fibs from more relative ranges, right? Does that make sense? So high to low here, even though we're still showing significance at various levels here with this fib, I think it makes more sense to look at this fib from a high to a low of the prior cycle, right? So we've got the last cycle's high to low. And even though we were showing respect on the very first cycle high to low, using this gives us the golden ratio, gives us all this stuff in here, bouncing right off the 786, finding resistance at the 1272, going up to the 1414, moving all the way up to the golden ratio there. That's the next kind of target area that would be implied. That's at about 174K. We're probably going to go just above there. And then continue, right? And then the 3618 here is all the way up at 3 million. By the time we get to 3 million, this fib will probably be irrelevant, right? There'll be other fibs to go off of. But I hope that helps. I hope that this video is rather coherent and sensible, right? What I like to do too, for anybody who's drawing fibs, you take the high to the low of the range. Now, we're on a monthly time frame. It's really easy to see these discernible highs. We go on the 1 hour time frame. Sometimes it's not so easy, right? Sometimes you're in a moment like this, and this is where it's on you as an analyst to kind of discern what's real and what's fake. High to low, this was pretty intense price action. And it might be a real price to go off of. We are respecting the 382 and the 236. We are respecting it, but I don't know if I like it. I don't know if I like, because is this real price action? I don't know. I don't know if I can accept that. So what I do in this situation is I'll go back. I'll look back and I'll see, okay, what can I gauge off of that is real? And this right here, this all-time high back in January to the low in April 7th, this is real. So here we're finding resistance at the 1272, found support at the 886. It's actually really good, and we would continue to move higher. Before I end the video, I want to leave you guys with some schematic kind of things here, okay, for the fibs. Typically, with a Fibonacci retracement tool, right, imagine you're coming up, you're making your move up higher, boom, there's the price, and now you've retraced. You've retraced all the way down, okay, high to low, whatever. There's your fib. Typically, if your price moves all the way down here, what you'll see is you'll see a move that comes up to your 382. You'll find resistance at your 382. You'll come back down to your 236. You'll come back up from there and go to your golden ratio. And then you'll find resistance there, come back down to your 0.5382 area for support. Then you'll move up to your 786 for resistance. Then you'll move back down to your golden ratio, and then so on and so forth. Then you go up to your extended areas, where you'll find resistance here, here, or here. And again, because you're breaking out of your high point, you do get a little bit of a larger move here typically, right? Larger than what you've seen really throughout this range here. And once you break above the 886, you're basically golden to this primary target zone, which is the 1272 to the 1618, okay? And this is just a random fib, but let's see if I can find an example of that, okay? That right there, that one kind of schematic will help you It'll help you tremendously, okay? High to low, right? Now here, it's a little bit different than how I portrayed it, but let's make sense. Here, you didn't run up to the 382. Instead, you found resistance right between the 382 and the 236, which is uncommon, but it happens. And what you did instead was you found support at the 236. So then you moved up, and now you're finding support at the 382. Yes, you wicked below it a little bit. Yes, you went below it, but whatever. You're finding support at the 382. When you moved up, where do you go from the 382? Typically, you go to the golden ratio. After finding support at the 382 or the 236, typically you go to the golden ratio. You don't stop at the 0.5. So you found some support there, some turbulence there, and you found direct support right there. Look at that. You found direct support at the golden ratio. It's a very powerful signal right there. That sent you all the way up through your 786, 886. But you still consolidated in this area, found some support back at the 786 before you were officially ready to get into your 1272 area. Look at how it's a similar stair stepping. Do you see the stair stepping going on here as I drew that one schematic? But it's just different fib levels. So pay attention to that, right? If instead of going from the 382 to the 236 and then to the golden ratio, you're doing you're consolidating at the 236, consolidating at the 382. Maybe here you don't need to go to the 236 before going to the golden ratio. Maybe then, because you've consolidated here so much, you're just ready to move up to the golden ratio, right? If you're moving up to the 886, what I will say is typically at this kind of formation, you would expect a more robust move. You wouldn't expect to stop at the 1272. And here, I remember we were calling for higher prices, right? This has been very unprecedented. This kind of behavior is actually very unprecedented. With extensions, when it comes to drawing extensions, you know, this right here, you could use this low point from the last cycle to the high point of this cycle, not the fake out high. I don't like fake outs. I use the actual high of the move, right? You can see how this high doesn't really have anything to do with this move over here. It has something to do with this move. It's a different kind of realm. I think this high, right? And you can use these fibs to identify, look, you didn't even find support at an area that makes sense as far as fibs go, and that's fine. But you see how that doesn't make sense right there? Right? You've got some points of resistance and support that come in. I also have, damn, I'm all over the place, but I forgot. I also have the 069. So I have the 69 and the 069. Sometimes you do find respect at this level. That's why I like to have it there, especially in like double bottom situations. But if you can't find significance here off of this fib, what might you do then? You might draw a fib from this low to this high to get some extensions going on. And look at that, your extension, you found support right there at the golden ratio extension, the 1618, to a T. You found support right there, right? So taking these significant, and I didn't just take any pivot. I could take this pivot. I'm sure this pivot is even respected to some degree. Let's see, from a high or a low to a high here. You know, you went down to your money zone. Look at that, right? You hit the 2618 first, and then you went down to your money zone and found direct support there on a smaller range. Typically, I would take the overall range, but you can use any of them, right? I hope it's clear. I'm not just drawing these fibs from any random place. I'm taking discernible lows and discernible highs, okay? It's not arbitrary. It's not just something that you can choose. It's not just any low and high either, right? Like if you take this low and this high, sure, it's going to be significant to some degree, and depending on your analysis, it might help, right? Are you measuring this move here? Great. That low to high might actually do really well. Look, you stopped right at the 2618 there. You stopped right there. But overall, I think you'd be more benefited if you took this high here, and who am I to say, this is just the way I would do it, high to low here, and then you correspond based off of that, found resistance at the 786, found resistance at the 100, found support there, found resistance here. You found support in a weird area, I'll admit, we thought you'd go lower because of that, but finding resistance at the next fib level, and then so on and so forth. That's how it goes. I hope this video makes sense. I feel like I'm rambling at this point, so I'm going to end it. I hope you guys enjoyed the video, and if you did, hit the like button, subscribe. Hopefully you all understand the fibs a little bit better and how I go about thinking of them. There's so much more than we've gone over in this video. Absolutely there is. If you really want to take your Fibonacci experience further, look up harmonics and look up Elliott wave theory. Elliott wave theory and harmonic patterns. Look those up. Once you get rocking and rolling with the fibs, those are patterns that you need the fibs. You need a fundamental understanding of the fibs before you can actually utilize them. So at least with this, you should be able to have a good start on your Fibonacci retracement journey and even have some things to look forward to. I'm telling you guys, we could talk for hours. I could make a video that lasts hours going over all kinds of things and it still wouldn't be enough. This is all information that I've compiled over the past 10 years in my experience using technical analysis, and there are a various amount of rules that we did not go over in this video, but I don't have time. It's Sunday. I'm going to go So I got nothing else. Hit the like button, subscribe, take care. Bye-bye.